This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell more than $1 on Monday as concerns about supply disruptions eased due to diplomatic efforts intensifying in an attempt to contain the conflict between Israel and the Palestinian Islamist group Hamas. Brent crude futures fell 67 cents to $91.49 a barrel, as of 0628 GMT, having lost $1.08 to $91.08 a barrel earlier on Monday. U.S. West Texas Intermediate crude futures were down 82 cents at $87.26 a barrel, after sliding $1.72 to $87.03 a barrel earlier in the session. The contracts had risen more than 1% last week for a second consecutive weekly jump on fears of potential supply disruption if the Israel-Hamas war grows into a wider confrontation in the Middle East, the world's biggest oil-supplying region.
Chinese refiners dipped into crude stockpiles for the second time in 3 months in September as they processed record volumes of oil even as imports dipped. Refiners drew about 240,000 barrel per day, BPD, from inventories in September, a sharp reversal from August when they added about 1.32 million barrels of oil per day to storage tanks. Refiners also called on stockpiles in July, though, when refinery processing exceeded the total volume of available crude by 510,000 barrels of oil per day.
Moving on to the top news in the energy sector.
Norway's natural gas output fell in September to its lowest level of any month since 1999, lagging an official forecast, while crude oil also fell behind expectations, the Norwegian Petroleum Directorate, NPD, said on Monday. Natural gas production in September fell to 199.8 million cubic meters, MCM, per day from 312.2 MCM a month ago, and missed a forecast of 319.1 MCM by 37.4%, the regulator said on its website. Crude oil output fell to 1.64 million barrels per day, BPD, in September from 1.79 million barrels of oil per day in August, below a forecast of 1.73 million barrels of oil per day, NPD's preliminary data showed.
Italy will approve on Monday a decree paving the way for extending hydroelectric and geothermal power concessions, a draft showed, while also cutting red tape for onshore liquefied natural gas, LNG, terminals and boosting renewable energy. Prime Minister Giorgia Meloni's government will meet at 13:30 GMT, to discuss and approve urgent measures to promote the country's energy security, officials from her office said. The legislation comes in the wake of rising wholesale gas prices, as the conflict between Hamas and Israel in the Middle East keep energy markets on edge.
Next, we have the top news in metal markets.
China's move on Friday to curb exports of graphite, a key electric vehicle battery material, will only accelerate efforts to develop alternative sources and materials, but that will take time, industry executives and analysts said. China, the world's largest graphite producer and exporter, will require export permits as of December 1st for some graphite products, including spherical graphite used by automakers. It refines more than 90% of the world's graphite into the material used in almost all EV battery anodes, which is the negatively charged portion of a battery. China's decision may escalate trade disputes globally and spur other countries to prioritize research into alternative sources and materials, industry executives said.
Dalian and Singapore iron ore futures fell on Monday, dragged by persistent concerns about China's property sector crisis and signs of weakening demand from Chinese steel mills. The most traded January iron ore on China's Dalian Commodity Exchange ended morning trade 3.2% lower at 828 yuan and 50 fen, $113.23 per metric ton. On the Singapore Exchange, the steelmaking ingredients benchmark November contract was down 1.1% at $111.30 per ton as of 0355 GMT. We will now look at the top news in the agricultural sector. Agricultural producers in Ukraine say a new Black Sea corridor could enable exports of up to 2.5 million metric tons of food a month, almost offsetting the impact of Russia's decision to quit a UN-brokered deal to allow grain shipments through the region. The export deal brokered by the United Nations and Turkey collapsed in July as Russia declined to recognize it, saying its demand that sanctions be lifted on its grain and fertilizer exports had not been met. Kyiv has since opened what it says is a temporary humanitarian corridor in a bid to break Russia's de facto blockade. Ukraine's shipping sources said more than 40 cargo vessels have entered the corridor so far.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.